All right, I think we'll get started. Good afternoon, everyone. My name is Deborah Summerfield, and on behalf of the Lake County Wine Grape Commission, I would like to welcome you all to Momentum 2020. While we aren't able to gather together in person at this time, we do hope you find this virtual event to be both timely and valuable. And before we get started, we'd like to do a little bit of housekeeping, just so y'all know what's going on. All attendees have been placed on mute, and during our session, the chat function has been disabled. Thank you to those who submitted questions in advance. If you do happen to have a question during the session, you may type it in the Q&A section, and if time allows at the very end of our seminar, we will ask our speakers to address those. The webinar is being recorded and will be made available on the Commission's website. All right, and here is sort of what we're going to be looking at. We've got a really great lineup of speakers today. We're super excited. To get a sense of the current state of the industry, we have two very knowledgeable speakers, Glenn Proctor and Jeff Bitter, who will each share the latest figures on grape and wine sales. And then we'll turn it over to our keynote speaker, Clay Shannon, to give his observations about what he's seen out in the marketplace. So first up, let's welcome Glenn Proctor, partner with Ciotti Global Wine and Grape Brokers. Glenn, let's turn it over to you and be sure to unmute yourself.
Thank you, Deborah. Appreciate it. Thanks for the invitation. Guys have a great group, so any way we can help support it, we love doing it. So thank you for that invitation. Now we're gonna share our screen. It's amazing how we're all learning new ways of doing things as we venture into the new world in terms of communication. So we appreciate it. Like I said, to have the opportunity. I'll talk a little bit about the wine and grape market as we see it from Ciotti's point of view. This is the paid promotional slide, but we've got brokers at 9 different locations around the world. We do broker between buyers and sellers, and as you put those deals together, you get a pretty good idea of what's happening in the marketplace, who's doing what to whom, and where the activity tends to be. So we'll talk about that. From our perspective is, just to go back, so we're sitting there in January in the California market, and just to kind of give a little history. So we had this phase of sluggish growth. If you remember, starting in 2017, we started to see some leveling off of overall case goods sales growth in the U.S. market. And then in 2018, we had a fairly large grape crush. So we were already in a little bit of an unbalanced situation when we were looking at January from some of those effects that had taken place. So the bulk market and spot grape market were relatively slow at that point of time in terms of what was going on. Bulk inventories were relatively high, and there was spot available grapes, right? Because as wineries were looking to lessen some of their commitments to adjust for some of the oversupply that was in the market. And so we were all trying to get ready for this new reality of 2020, which was going to be interesting, but I think at some point we saw a path forward. And I think we still do. But as you look at it, hold on one second here. Got to share it again. But as you look at it going forward, you know what? My screen is freezing up. This is always good. There we go. I do it a different way. We then happened, March and the virus and COVID and the pandemic situation. So things have changed in terms of the consumers that were, and the business has changed because of some of these factors. So in March, we started some of the SIP protocols, a lot of closures, restrictions around restaurants, tasting room, tourism, travel. Consumer behavior started to change dramatically. We'll talk a little bit about that in terms of what we see in terms of case sales in the market as consumers in a lot of things, but they were changing how they were doing everyday things, and that was affecting how they consume wine. And the one of the things as we go through this, it's really been difficult to understand and predict how these changes are going to impact the wine industry and how long they're going to last. And it's our belief is once we think, and they're going to keep moving back and forth a little bit as we try to balance out keeping people safe and also the economy. So I think there's a lot of what's going on from buyers and even sellers is trying to understand this new normal. What are the dynamics that are taking place now, and how do we adjust to that? So Danny Brager at the Nielsen Company was kind enough to lend me a few slides. So I want to give credit where credit is due. But these just a few, so they look mostly at off-premise activity, and off-premise is where the consumer's gone. So they've been buying wine, not at restaurants and not at tasting rooms because those are shut down, but they've changed their purchasing habits. So you can see here, starting in March after COVID, we had a big buy-in, kind of pantry stuffing along with the wine side, and wine is represented in red in this chart. And then it kind of slowed down, but we've kind of held, as you can see here, this goes out into May, we've held a very consistent somewhere around 30%, 26 to 30% growth in terms of overall wine on the off-premise market. So there's been some good news in the sense that that segment of the market is growing very fast. One of the challenges is given where the on-premise market has fallen flat, we almost need to sell on a volume basis 22+% increase in the off-premise to make up what we're losing in the on. So it's interesting how the consumers are looking at it differently. Here's another data slide from Nielsen where they've compiled some different data, but this looks at growth on a dollar basis versus the prior year, and in blue is online. So you can see people have gone to off-premise in terms of the retail, and that's up, and that's on the bottom, but then they've also gone and done online. So you may be not having your wine club, and Clay maybe talks about this, that's coming to your place, but people are going and doing online Drizzly, and there's other services that consumers are finding different ways to still get the wine they want to drink. And this is the last of the Nielsen slides. I think this one's an interesting one. It'll kind of flow into what we're going to talk about, is we have seen, though, during this COVID period, the top brands are growing the most. So whether they're the trusted brands, maybe they're the right size format, they're easier, but we're seeing consumers go back and buy what they can readily get and make that decision simple. So you can see the bigger brands are tending to grow faster than the other brands. And that's going to feed in a little bit as how we're seeing the market react. So wanted to give you a little bit where we were, what's happened, and where case goods sales, and then to jump into where we are with the bulk market and grape market. And we'll go through this pretty fast, but if we have time for questions, and you can email away with questions later if you so would like other answers that we can provide. But you look at the bulk market activity, it's actually been relatively brisk. So we've been busy. And a lot of that started in March. So this whole thing is, as consumers changed what they were buying and this off-premise was growing, we started to see more activity. A lot of that's hand to mouth, which means, hey, I need it now because I'm selling more cases into this retail outlet. They're buying it not for the future, but buying it for now. The other dynamic we saw and are seeing is that some of these large buyers had excess inventory before COVID, and they were selling this on the bulk market. What we immediately saw is some of those large wineries said, you know what? I'm pulling it off the market. I'm not going to sell it because I need that internally. So even though they weren't buying, they pulled the inventory off the market. So that's addition by subtraction. And then two, we saw a couple larger wineries that had been very hesitant to buy anything, meaning, you were wondering if they were still around, coming into the market and saying, I need wine. So definitely the buyers have entered the market because of COVID, but a lot of this is at a certain price segment, and that's what we'll talk about next. Bulk pricing has remained relatively firm. And activity's been good. I think you could say there's some slight strengthening in the value, the lower price segment of what we're selling for bulk. There's not as many $2 and $3 deals out there on the low end, but it hasn't. It's hard to say the bulk market's gone up in price, but it's definitely firmed at the value segment. There's still going to be, as we get closer to harvest, there's going to be some, I need to empty my tank deals at lower prices as people just try to get ready for that. So those are still be there. And then in the premium market, so the higher price bulk wines, we're starting to see some slippage, and we'll talk about that. That's the area that we're starting to see just a little bit of weakness. In terms of what's being bought, the mainstays really in our mind are, consumers are going back, getting what they're comfortable with and getting what they're used to when they go to that shelf. Chardonnay, Cabernet, Pinot, and then they're buying the brands they know, what we showed in that last Nielsen slide. So that seems to be where they're going, and that's one reason some of the larger wineries are benefiting from that takeaway from the shelf. We continue to see activity around Russian River Pinot and Chard and Napa Cab activity. A lot of that was going into private label. Our concern is we may see more bulk inventory come onto the market. There are some of these on-premise brands have to justify or rectify where they sit from a supply and demand basis. Napa Cab's been still very strong in terms of activity. There's not a lot out there, but pricing is definitely significantly below what it's been. So it's not necessarily going up in price, but there's been decent activity around Napa Cab. But what we're seeing is this bifurcation of the market. So this value mid-priced end, which is a lot of these well-positioned off-premise brands, is growing. And so the market activity around bulk and grape servicing those needs seems to be the most active in the market today. When you look at the premium end, where you've got the on-premise tasting rooms, smaller size brands that reach to get their sales maybe more less from an off-premise way, and there's weakness in their sales numbers, that's where you're seeing the market not being as active right now, where we're seeing some weakness. The other thing we've seen is, maybe I talked to a winery 3 months ago and they were doing fine. Hey, we got this. We're very balanced. And then they may call me 2 weeks and go, hey, Glenn, we just revised our sales forecast because of our on-premise numbers. All of a sudden I've got some extra bulk wine or extra grapes I need to sell now to bring that back into balance. So that's a little bit of what's taking place. And that's why we say the market is bifurcating. But when you look at California bulk wine inventory overall, and this is what we showed the Ciotti Company, and I think we represent virtually all bulk wine inventory out there, you can see that we're starting to see, when you look at May and June, some takeaway in terms of volume. So cab is reduced significantly. Some of that is buyers have pulled cab off the market because they're keeping it for themselves. Some of that is we've had buyers enter the market, but there has been activity, as you can see here, based on this. And so this is like with Cabernet, it is all the gallons for every appellation and all vintages. And then for each variety, and then we slice that each month. So you can see that there's been some purchasing and activity on the market, and demonstrated just, with the numbers. In terms of the California grape market, and I think Jeff will talk about this too, and he's got a very good handle on what's going on in the world. But part of what's going on is we've got more grapes available in the marketplace today than we've had in a while. And as we've talked about earlier, that started with wineries giving notice on grower contracts as they tried to adjust and maybe, so they're adjusting their supply and their pricing of where they want to go in the future. So that has changed the market, right? Because last year, where a grower had, I've got 90% of my grapes sold, is different with that same grower only has 60% sold this year. So that's made it tougher in terms of looking at the grape market. But there has been some good news in terms of activity. So I would say, and it probably in my mind in some ways holds true with the COVID effect, but this off-premise growth. So the Central Valley, we've seen very good activity over the last 3 to 4 weeks. Buyers are being pretty selective because there's a lot of grapes to choose from, but they're out there offering contracts at minimum pricing. Now, the minimum pricing isn't something you're going to write home about, but it's sustainable at some level. So buyers aren't overpaying, but I do think there's activity out there, and growers are entering into contracts in the valley. So that seems to be relatively solid. On the coast, it's been really tough to find the regular buyers coming back into the market. So we're seeing value buyers, they're what kind of good deal can I get on, this variety in Sonoma County or Lake County or whatever, so they're coming into the market, but the regular buyers are still waiting. And we'll talk about why, but they really haven't entered the market yet. And then the other change is we're starting to see some buyers become sellers. So more and more, I get a winery, I said, are you a buyer? They go, no, I've got some grapes to list. So that's the other dynamic, at least on that coastal, more premium end, where we're seeing a little bit of pressure. I think the crop size looks average to slightly below, but I always love this time of year because that's a debate. The grower always says, oh, it's lighter than you know the grapes there. And the winery says, oh my God, I've never seen it so big. Or so we'll see as we get through, but it appears to be, an average crop. I mean, definitely there's some parts of the North Coast that were affected by frost and set with the rain during bloom. But I think that's where we're headed. But I think the biggest issue with buyers looking at this market right now is this uncertain future, right? I just don't think wineries have a really good handle, and not as many of us, on what my sales projections are going to be 3 months from now, 6 months from now, or 12 months from now. And because we've got significant amount of grapes still available that you can buy, I don't really think they haven't really entered the market yet. So I'm still hopeful that we'll see some buyers come back into the market once they understand this new normal. How are things going to play out as we open up? I also think that wineries have a lot of grapes that they released. So at some point, even if they're not growing in terms of total sales numbers, they got to come out and buy fruit just to kind of reload. So we still see potentially some activity, and we may see more spot activity than we saw last year as we go through this year. But again, it's hard to predict the future. And just some thoughts in terms of what we are seeing. I think with COVID and its effects on the market, we're definitely seeing some benefiting and some others being challenged. So it's reacting differently. And I think it could all change again, depending on how we open up, depending on how consumers respond. The other observations we're seeing, though, is definitely delayed payments. So suppliers are going, hey, Glenn, where's my money? Can you check? I think a lot of people are worried about cash flow and holding money. Definitely seen more of that. Negotiations on contract price and payment terms. I know I've got a contract, but can I delay the payment terms? Can we renegotiate the price? Can you give me 10% and because I need some help as a winery as we're going through this. It's tough if you're a grower and you only got 50% of your grapes sold and they're asking, so it's a tough situation. So we're seeing a little bit of that, but there's this general financial tightening. As I talked to a client today, they go, yep, bank's on me. They wanted to see this, and this, people are going back, and definitely you can feel that financial tightening going on as we try to go through this. But I think as we get back to this new normal, I think there's going to be opportunities. As we get a better idea of what's going on, you're going to see people start to take action and have activity in the market. And so that's my hope going forward. And we'll just have to see how that plays out. I think in our thoughts, you've got to be willing and be creative to do deals. I think you got to make sure you're negotiating based on today, not on 3 years ago and what you thought the prices should be. I think you got to get through, at least in the short term, and be open to taking deals. It's just, I think, the way the market's going to play out this year. But I still feel very optimistic about the wine business in general and the wine business in Lake County. I think there's some very good quality grapes and there's some very good quality wines. And we are going to get through this together, but I think it's going to, it's going to take a little time and a little understanding, and us, working together to make that happen. So I wanted to thank you for your time and attention, and we do some reports and stuff out there, but if you need any information, feel free to give us a call any way we can help. And thanks again. Appreciate the opportunity.
Hey, thank you so much, Glenn. We really appreciate it. Great information and very timely. Let's turn it over now to Jeff Bitter, President of Allied Grape Growers. Jeff, take it away.
Thank you, Deborah. Let me get this up here for us. Okay, so I'm going to just kind of follow along with what Glenn said on a lot of things, not to duplicate what he said, but just to expand on certain ideas in the marketplace, but also talk about kind of our overall supply situation and where we're kind of heading at this point. We clearly knew prior to COVID-19 that we were in an oversupply situation. There's no secret about that. And, we talked a lot at the Unified about the supply situation and that grapes needed to come out of the ground in order to balance the marketplace. And so today we're going to review some of that. So the goal is to identify challenges today that we currently face, and then look to how these challenges might become opportunities. Because I think that in the big picture right now, what we're seeing is just a major shift happening. But I think the end result is that we're going to come out of this, and it's just going to look a little different. So we need to know what those differences might look like and how to position ourselves for that. So there's opportunity in that. And then, of course, the plan to get to the goal is to dig into the supply situation a little bit, discuss market activity and trends, which will be a little bit more about what Glenn said. And then also at the end, just kind of introduce some questions and emerging themes for further thought and dialogue as we close the session. So setting the stage here with supply discussion. During the winter, the beginning of this kind of growing season, we were looking at where we were acreage-wise in the state and where we came out from the 2019 harvest. And we really hit our peak bearing acres in 2018 and 2019. That's the top of that graph there where it curves over. And we've had a significant amount of pullout so far this winter. So that bearing acreage number is definitely dropping. But I would say, based on our analysis of the market and overall supply and demand and the bigger industry trends, that our bearing acreage target range is probably between 540 and 560,000 acres. And so the reason we're in an oversupply is simply because we have too many bearing acres. And we've talked about that a lot previously. And we're seeing growers remove acreage for sure. And especially in this year, in 2020, significantly increased acreage removals in the coastal regions. And that's what this graph points out, with the blue part of each bar being the coastal removals and the green being the interior. And you can see over the years, of course, we've been removing a lot of grapes from the interior regions because the market has been changing. The dynamic of where consumers have been buying wine has been changing. And that's been decreasing the demand for interior grapes. And so over the years, that's where we've seen the pullouts. There hasn't been the incentive for growers to remove vineyards in the coast. In fact, it was the opposite. The incentive has been for growers and wineries alike to expand production as consumers practice premiumization, and there's more and more demand at the upper end of the market for higher priced wines. And so, if anything, I would say what happened over those years was we failed to remove vineyards maybe that were destined for removal, that were maybe lower in production or virus challenged or whatever. And some of those vineyards stayed in the ground a little bit longer than they should have because the market allowed them to, because there was demand. And so we see that very clearly in this chart. And all of a sudden this year, when the market changed dramatically for spot market coastal grapes in 2019, we've seen a spike in coastal vineyard removals. So there's differences between the regions with regard to removal activity. And a lot of it depends on whether the vineyard is winery versus grower owned. We're seeing a lot of wineries actually taking this opportunity to remove vineyards and then just subsequently replant in order to retool and improve their quality or their production on certain sites. We see different activity based on cropping alternatives, whether or not there are alternative crops that can be put in areas where wine grapes are pretty much the crop or the only crop to grow. We don't see them being removed and substituted with other crops. So that definitely is region dependent. And then there's kind of a last man standing mentality out there with some folks where they just figure, well, if all my neighbors pull their grapes out, then I'll be the last man standing and I'll be in good shape again. And that drives people's decisions sometimes on whether or not to remove a vineyard. And of course, that takes a lot of wherewithal with regard to, being able to maybe withstand a couple of tough years during that time. But some people have the resources and the ability to do that. And then there's always the question of whether someone's operating a lifestyle or an actual commercial vineyard. There's a lot of wine grape growers in this state that will not remove their vineyards because it happens to be the acreage around their house, and that's what they want around their house is a vineyard. And so those folks tend to have more tolerance for market fluctuation. And in some areas of the state, some folks are afraid to pull their vineyards out because of water rights preservation. They don't want to pull vineyards out and then find out in 3 or 4 years when they want to redevelop that ground to vineyard or any other crop, that they have a hard time retaining the ability to drill wells or pump groundwater because of the fact that it wasn't in production for a number of years. So that drives some people's decision to actually keep vineyards in the ground to preserve their water rights. And then, of course, is a question of how young the vineyard is. You're much less apt to pull out a 10-year-old vineyard than you would be a 25-year-old vineyard. So there's this question of what exactly is the investment loss if you make that decision to remove your vineyard. So overall, we see in the interior regions, probably 4 to 5% of the bearing acres come out this year since the 2019 harvest. And almost all of those have been planted into orchards of some kind, whether it's nuts or fruit, citrus or other fruit trees. So basically, there are virtually no vineyards being planted in the valley right now in the interior, in the Central Valley. In the North Coast, 4 to 5% of the bearing acres, again, is what our estimate is, about the same as the valley of what's come out, or at least what's not bearing this year versus last. And that's because in some cases we just see abandoned vineyards. We don't necessarily see, everybody that gets out of the vineyard business removes their vineyard right away. And we tend to see this more in Lake and maybe Mendocino County, where folks will just walk away from their vineyard and abandon it. So it's not removed, it's not pulled out, but it's not being farmed either. And it's questionable whether or not that will or can be brought back anytime in the future. But most of the removals have actually happened in the Central Coast. And we believe there's up to 15% of the bearing acreage that actually has been removed since the 2019 harvest in the Central Coast. And there's a lot of reasons why. I'm not going to talk a lot about the Central Coast on a Lake County Zoom meeting, but the reality is that market down there has been very difficult for a number of years, not just 2019. There's just kind of a general lack of buying activity from the bigger buyers. And they just had a need to adjust their acreage significantly. And so winery vineyards down there, winery-owned vineyards, are being replanted to grapes, but grower vineyards not so much, as they see less opportunity to redevelop into vineyards at this point. But even when we put all these kind of numbers together, the reality is if we look at the history of what we've produced in each crop year and on what bearing acres that was produced on, we still, as we look into 2020 and 2021, are very capable of producing 4 million tons. We're not to the point where, we've pulled out so much since, last harvest that we're not going to be able to hit 4 million tons or something near that. It's certainly still a possibility. But I would say 4 million tons and slightly less is where we would need to be longer term, given the market demand today and the capacity of the market to accept what we produce. And so we're moving toward that future balance. If Glenn and his crew can move all of the inventory and we could get that pushed through the system somehow on the retail end, then that's when we really start moving into an overall balance in the marketplace. I would say our bigger problem today are current inventory levels and current dynamics in the winery in terms of full tanks or near full tanks than our problem is that we have this looming oversupply that we're just going to continue to live with. I don't think that's the case at all. I think we are actually moving toward having a nice balanced situation here over the next year or two. So one of the dynamics about what's happened over the last few years is that as we look at what's been planted, these are now wine grapes planted by year. The blue part again is coastal and the green is interior. We have developed vineyards in the coastal areas because that's, well, like I said earlier, where the demand was, and folks were looking to expand programs and premiumize and do all of that more so in the coastal areas in the interior. So we've got 60,000 acres of non-bearing grapes that will come into production still over the next 3 years, 2020, 21, and 22. And so there's no shortage of grapes. And that's why as an industry, we still need to continue our efforts to remove older, non-productive vineyards, virus vineyards, and to keep that balance as we move forward, because there's definitely some grapes still in the pipeline coming into production. So it's kind of shifting gears a little bit to the market dynamics. We can no longer look, to the past wine market trends to accurately predict the future. in other words, there's no guarantee of premiumization growth. And if you look at the wine market over time, it's been a multi-decade trend, I would say 30 years of growth, and I would call it sustained growth. And most of that growth was also tied to, the concept or idea of premiumization and moving away from, California as a jug wine producer to California as a premium wine producer. And so we can't necessarily look at that trend over the last 30 years and say that's how it's going to continue to be. There's too many dynamics in the marketplace today that are changing that. And we already saw that changing well prior to COVID-19. Coastal grape and wine supply has grown, while today's consumer may actually be likely, going to move toward value wines. And I still am convinced that consumers won't necessarily drink less wine. They're probably in times like these just going to drink cheaper wine or change their consuming habits because of the conditions that they are in their environment, whether it's economic or the fact that, under current stay-in-place orders or shelter-in-place orders, that they simply can't go out and consume on premise. So those types of events lend themselves to push consumers toward buying cheaper wine. It's unlikely they're going to go to the grocery store and buy the same level of wine that they consume at home. And doesn't mean they don't like those wines. It doesn't mean that they're not good values. But the reality is you make different decisions when you're in different situations. And most people will make a decision to spend a little less in the grocery store than they would sitting over a candlelight dinner with a cloth tablecloth, white tablecloth at dinner with their wife, or significant other, whatever. And so overall, there's kind of less margin in the supply chain, I think, because of that. And so that's going to put some downward pressure on everybody all throughout the supply chain to be cost effective in what they're doing and at the prices they sell at. And so right now, kind of to reiterate some of the things Glenn said, there's a hot and cold grape market simultaneously. I can basically agree with Glenn and say, whatever is happening in the coast is not what's happening in the valley. It's almost like two different, as Glenn said, bifurcated markets. The large wineries are definitely have come out of hibernation in the interior regions. They were very quiet last year, not purchasing much spot market grapes at all. But the offers are multi-year, so they're looking to take advantage of what's probably largely viewed as the bottom of the market by offering multi-year contracts with relatively low minimum prices. Exactly what Glenn said. But the reason why they do that, the impetus behind the behavior, is that clearly they see today's market as the bottom, and that's when you want to go out and offer a multi-year contract with a minimum price reflected above today's prices. And so we've seen that activity fire up quite significantly here in the last month or two. And then small buyers statewide are generally suffering and kind of paralyzed. They're just not moving in the marketplace because of all the challenges that they face in their various situations of selling mostly on premise and direct to California restaurants, and other retail outlets. So the current small grape buyer behavior, and this kind of mirrors a lot of what Glenn said as well, is that they're just trying to find ways to do some damage control for their current situation. And I think a lot of small businesses, whether you're a winery or anybody else in California or even in the nation, operates much like today's consumer operates, and that is kind of paycheck to paycheck, loan to loan, month to month, kind of living on the line of credit. And I don't think there's a lot of small businesses out there that are flush with additional cash and additional resources and capital. And so when something like this that is terribly disruptive to their livelihood and their business happens, they have no choice but to try to make some drastic changes in very short order. And so we see them asking for, some relief on terms and even doing things like exploring force majeure, trying to get out of contract obligations with the virus as an excuse. And, I think that's highly debatable whether or not that actually flies under an arbitration or a court appearance. But the reality is that, they're being forced into a corner by their situation to kind of pull out the stops and try and do everything they can to address their situation in some cases. So, the upside to all this is that there's still some activity on the coast for guys looking for small niche opportunities. And a lot of that's around organic production, or maybe varieties that are not mainstream, not your chocolate, strawberry, and vanilla, as we always say about, Cab, Chardonnay, and Pinot. But the reality is there are some deals and offers out there for other alternative varieties. They're not huge quantities. We're not talking about hundreds of tons at a time, but there's some niche deals out there happening. And there's still that segment of the market that wants something alternative. So kind of moving to the end here, the questions, challenges, and opportunities. Market demand is clearly shifting. And how long does that last? That's everybody's question. And we don't know. None of us know. But, under shifting demand, where does Lake County fit into the market space? And I put this little note at the end of this. It says we're current in a transitionary lull. And the reason I did that is to remind myself to talk to you guys about the reality that what we've experienced over the last few months is really due to this transitionary time we're in, where people are just trying to figure out what is the future. And I kind of liken it to when you're playing musical chairs and the music starts and you all stand up and you start walking around in a circle. And I think that's where we're at right now. The music's playing, everybody's walking in a circle, and eventually the music stops and you sit down and everybody claims their spot and you move forward. And I think we're in that time right now. It's not that there isn't going to be demand. It's not that there's not opportunities. It's not even that there won't be any grapes purchased this year. None of those things are true. The reality is that it's just a transitionary lull right now, where people are not going to make decisions until they have to. And in fact, they see some decision making right now as being risky and just not having all the knowledge they could to make those decisions. So they're going to wait as long as they possibly can. And so I wouldn't get too terribly concerned about this time that we're in today at this point in time. And kind of along the lines of this shifting demand, overall, I think, as Glenn might have spoke to, overall volume probably isn't going to change much. And if anything, there's a lot of speculation that volume could increase over the next year or so under these current conditions. So the question is, how do we shift and move in accordance with that? If the volume's there, we have an opportunity to be a part of that in Lake County or anywhere else in the coastal areas, even though those are the areas that are currently on the longer side of supply. So, is it practical to move your vineyard to more of a production style farming operation during these times? If the demand is there and perhaps the market isn't going to be as solid or strong as it's been in recent years, then how do we adjust? And I would say one of the first things you look at is, how do you produce more tons while not, jeopardizing quality, and move more towards production style farming for the time being. So that's one of the things that has to be a consideration under the current market conditions. So the bottom line is that it's unpredictable, and there's some significantly impactful events that seem to be more common these days. It just seems like every time we turn around, we're getting hit with a new challenge. And, whether it's wildfires or smoke, planned power outages, pandemics, trade wars, economic instability. And when I say economic instability, who sees the stock market bouncing up and down by, darn near 10,000 points over a few month period? I would call that some instability. I don't see anything stable about that. But that feeds into the whole psyche of the consumer and even the small business owner, the winery, the distributor, everybody. There's a lot of instability there, that an uncertainty of what's going on. And so overall, our industry is becoming one that's being forced to maneuver more like a hummingbird and not a freight ship. And I think in the past, you know, the wine industry has kind of moved like a freight ship, kind of these long, big sweeping turns towards a different direction. But the reality is, with all of these conditions around us, we've got to position ourselves to be more nimble and maneuver more like a hummingbird. So in summary, there's some emerging themes here. You know, we have this suddenly changing consumer mindset. How do we make sure we are in front of the consumer where they are at now? They're still there. They're still drinking wine. We just got to make sure we're in front of them and that we're offering them what they want. There's a huge uncertainty and lack of clarity about the future. And then, of course, this looming deep recession that I think is on a lot of people's mind. I mentioned economic instability a second ago, but the bigger issue down the line is, you know, if we're moving toward a longer term period of recession, what does that mean? And how do consumers behave under that scenario? And you know, Glenn mentioned quite a bit about credit risk. I think that becomes a big deal during those types of those times. And so we have to be aware of that as a major emerging theme here. And then the changing distribution of alcohol. There is and there's going to be new and different ways to get alcohol, specifically wine and other products, but wine today is what we're talking about, into the hands of consumers. And that has to do with not just channels to market, but also, you know, package development, product and package development. And so overall, again, just the ability to stay nimble. What do we do to manage our risk on our side in an effort to be able to cope with the changes that are coming out of the environment these days at us? And so ask yourself, how can I manage risk? You know, normally your risk management has to do with your diversity. And I think that plays true still today. How diverse are you in the crops that you grow and the varieties you grow or whatever? And how diverse are you in, you know, who you're doing business with? Large buyers / small buyers, you know, all of those types of issues and questions. And those are things that you need to consider for the future. That's not just a question for today, but as we go forward in general for years from now. If you've got all your eggs in one basket in any one time and place, you're kind of asking for some additional risk. And that's what's going to come in times of change. So with that, I'll go ahead and turn it back to Deborah.
Great. Jeff, wonderful information as always. Thank you for your insights. With that, I would like to shift gears a little bit and turn it over to Clay Shannon for his observations. Clay is owner of Shannon Ranches and Shannon Ridge Family of Wines, so has some broad perspective to share. So Clay, take it away.
All right, I am here calling into my Zoom Momentum Symposium from sunny Naples, Florida, after a few drinks around the pool this afternoon, so I could chill out a little bit and talk, hopefully pass some good information along. It is raining, pouring, thunder and lightning out here, so that's kind of fun. So if you hear any loud noise, that's the thunder outside. But first off, I want to thank Glenn and Jeff for showing up and helping us out here, and Megan and Deborah for Megan's not on the screen, but she's behind the scenes there, and for putting on this event. We had planned on doing this on it for a couple of months ago, or I don't even actually the same time. But anyhow, this is the way we communicate these days. I don't know if you know much about us, but just a little blurb. We call ourselves Shannon Ridge Family of Wines, and we've been making wine for, we started in 2003. Up until recently, we thought we were going to sell about 330,000 cases of wine this year. And but at this point, I don't really know. But we've had a pretty good January. We've had a great February. We sold twice the amount of wine in March that we ever thought we would sell. Softened up a little bit in April, but it was still good. And May was good, and June looks like it's going to be good as well. But a lot has changed. And if I'm not looking at the screen, I'm looking at my notes because I'm not smart enough to have a PowerPoint like these college-educated folks that I'm working with today. So I don't know how to do that. So And I guess we have help, but anyhow, I'm looking at my notes over here. But yeah, no, a lot of things have changed. We got into the wine business, and I got to get the wording correct on this so I don't say anything negative, because I'm really not sure of the people that are out there listening. But we got into the wine business because some large wineries would not renew their planting contracts we had with them. So thank you for the planting contract, and at this point, thank you for not renewing it. But basically, that was our first lesson in supply and demand. And so we're a large Lake County grower. We had too much fruit, and we kept planting. I mean, I think great growers and farmers just love to do that. I still love to plant grapes. We kept planting and planting. We had more fruit and more fruit. And to be honest with you, we're planting a little bit this year. And however, Jeff, we did pull out some vineyard this year as well. And we're going to pull out some more next year. So I'm doing a little bit of that. But we had a lot of fruit, didn't know what to do with it. And we still have too much fruit. And if anybody on this call or anybody listening thinks that there's any winery in the country that is not a little bit worried about what the world is doing to us right now, and if they have not enough inventory, I would be surprised. I think every large winery that I know of, every winery I know of, has maybe a little bit too much inventory. Taking a drink of water, has a little whiskey in it. Not quite, but anyhow, there's a lot of inventory out there. So we're going to get in the wine business. I'm going to go pretty fast here because my two partners here talk too much. We didn't know what the hell we were doing. We thought, well, we're going to make some wine. We're going to open up a local tasting room, and there's 60,000 people in Lake County and Highway 20. We're going to sell everything out the front door. No. And then we thought, well, we're going to hire a distributor, and that should be easy. I mean, and we thought it should be easy, sell wine, get a distributor. They're going to be lined up to talk to us because we're bragging about our high elevation wines and our red volcanic soils and our clean air and mountain grown fruit. No brainer, right? Nobody cares about that. Nobody. Honestly, what they care about and how you run a wine business, and we're still learning, is about basically category management, crossing your T's, dotting your I's, micromanaging, and follow up, and aggressive, hard work. But the most important thing, I think, is being pleasantly persistent. And you just got to stay on it. And, this is not a 40-hour job. It's not 50. Angie and I, we still work 80 hours a week. And so if you're working that much, you better fall in love with it. So, the other thing, we just work hard. All right, I'm going to my next page now, but it is a lot about hard work. And here we are. So this year we kind of planned on, well, we're going to sell 20,000 cases of wine to China this year. So bottled it up, couple different brands, nothing happened. And all of a sudden the tariff came, or they started tariffing things. Our business in China went to zero. And then there was another tariff in the European thing. And our business perked up a little bit. So there's been a lot of good, a lot of bad. Currently, a lot of volatility in the market. I think grape buyers and wineries are feeling the same as the stock market. If you don't watch the Dow Jones industrial averages, you should. Because, 2 days ago was up 1,000, 1,100 points. Yesterday it was down 200 points. Today, when I looked, I kept looking over here, it's down about 1,862 points. And that just makes people nervous. You may change what you probably can still go out to dinner tonight if there's a place to go out to dinner, but you may change the bottle of wine you buy, if you buy wine at all, but you're going to drink for sure. I mean, that's one thing about this virus thing that I think we're seeing is that people are drinking more. At least I am. And I think everybody on the call is too. So let's talk about some solutions that it's not a fix all, but some things that we should be doing and some things that we should acknowledge. as a grower, and I'm talking to the other growers that are hopefully on this call listening, but one of the things that we have to do, much like a lot of the European farmers that I know, is that we got to be really committed to this business. You know, all of us here on this screen right now are really committed. We have to be committed growers, and we have to be passionate about what we do. And we also have to acknowledge the fact that, you know, it's not about making money. To me, when we got in the wine business, it's about, let's see if we can just not lose money. And if we can not lose money and we can make a living, we win. And I think that's where we are today. And so if some of you folks are not thinking that way, then you're in for a big reality check, because you are in a very cyclical, perishable crop, perennial crop business. You're going to have big crops and you're going to have small ones. You're going to invest a lot into your vineyard, and you're going to have some incredible years, because that's just the way this works. You're going to have ups and downs. And I think we should get used to it and get used to the fact of being, this is what we do, and being committed to the business we have. And the fact is, you're going to have some good ones, you're going to have some bad ones, but we're in a pretty crazy world right now. And I think everybody's thinking the same way. Being passionate. Some of you folks may not belong in this business. Some of you maybe made an investment to get into this thing and think you're going to make a lot of money. I don't know. I'm really happy with making a good living. Our goals, again, should be to make a living, not necessarily get rich. The value of your property, if we keep working hard, is going to go up. I believe that you need to understand the business, and there's a lot to understand about this business. It's not about, you know, just selling your grapes. Quit being a grape grower. Start being a wine grower. Understand where your product goes. You sell the grapes, it gets fermented, it goes into a stainless steel tank, it may go into a barrel. And if it's red wine, it could be 2 years before it's out on the shelf somewhere. And if it's white wine, it could be out in a couple of months. But I think you should start understanding your business. I know we're trying to learn more about what we're doing. I think you should understand about the Lake County market. And I think Jeff was saying something a few seconds ago about the Lake County market space. I don't know if there is any Lake County market space. We don't have a zip code that is strong enough. It's not Burgundy, it's not Napa, but it's Lake County. We are a blender. So our white wines are going to certain places, Sauvignon Blanc, and Cabernet generally is going into California Appalachian blends. And I was in Publix Market 2 nights ago in Florida here. And if you don't know Publix, they have, I think, 1,200 stores. Naples is a fairly, I don't know how you'd explain it, wealthy area or positive, you know, area. So all your fruit goes to the same places our fruit goes, because we still sell grapes too. But please know that there's only 2 appellated wine brands on the shelf at Publix in the $10 to $20 range. That's Jerry Lore and Shannon Ridge. That's it. And ours is Buckshack. And everything else is going to California Appalachian things. And I mean, there's some little things, but it's not on a grocery store shelf. And the grocery store business is where it's happening right now. So I would really like you to understand where you're at. Our grapes are going into the $10 to $20 price segment generally. And I see Jeff, I mean, nod your head no too if I'm saying something wrong, Jeff. But I think we're going to $10 to $20, and we are a blender. And if you're going into I don't want to mention any names, but one of those, you know, some of these nice brands that are buying a lot of fruit up in the county, they're probably putting about a third, 20 to 30, 35% Lake County Cabernet into it. And they're putting the balance of, you know, Lodi, California Appalachian type of stuff. And they're selling it at their $70 or $80 FOB. And they're making hopefully 40% or plus margin. And that's what it takes in this business. And they have and we're a blender. There's no $20, very few $20 Lake County programs out there. None that I see. California Appalachian, because of margin. Lake County is a blender. I think if you want to create long-term brand or strength and demand for our fruit up there, we need to really partner with a lot of the people that are buying our wine, our grapes, and selling our grapes, our brokers, our folks that we're listening to today. And you need to understand what they're going up against in these crazy times. I mean, you think you're uncomfortable with not selling grapes. How would you like to have 2 years of inventory of wine that you're worried about, and all of a sudden the on-premise business gets shut down in New York City and you were selling 150,000 cases there? What are you going to do with that? And so we need to partner with some folks. You need to consider, I think, Jeff, you said terms. I think you should give them good terms. Sell things at a good price where they can make money, get some length to your contract, and be in the customer service business. And that's probably the most important thing. We're a supplier in the wine business. We're a wine grower, and our customers are distributors and buyers and retailers and such. And we're in the customer service business. So serve your customer. And if you're selling grapes and you're selling to Joe God or Delicato or Josh or one of these other nice brands out there, be kind, be nice, be professional, and don't become a winemaker at harvest time. Okay, we bought a little bit of fruit, and it's really stressful because you get growers that all of a sudden, when your Cabernet's 24, you start getting phone calls. And I know I'm speaking for a lot of the wineries because I know how it works, but the growers, in some cases, not all, they're calling up and saying my fruit's ready. And they don't know. They don't know what program it's going into. They don't know what the buyer wants, the consumer wants. And the consumers and buyers want big, fat, juicy, round, velvety Cabernet, and it doesn't come at 24 bricks. It comes as the climate gets warmer, it's coming at 27 or 28, 29 bricks. I don't know what it is, but you got to ripen that seed, understand what winemaking's about, and understand what their business is about, and serve your customer. And you might be surprised that you get some longer term players. Don't always look for the top price, because that's harder to fund every year, is that high price. And so a little bit about the wine business, just so you know, the highest cost of wine is in grapes. So maybe, I don't know, 75% of the cost of goods, 60% is in grapes. So it matters. $200 a ton matters. So again, to do more things for our industry up there. And I'm going to beat up the brokers here a little bit, because I've heard them. Sorry, Glenn. Sorry in advance. But I've heard sometimes the brokers say, don't make any bulk wine. And I think that I agree. Most people don't need to, but some of us need to make bulk wine, because some of the glimmers of hope out there in the retail shelves is a lot of private label business. And there's also some negotiant folks. They don't have wineries. And thanks, Deborah. They don't have wineries, and they need to buy bulk wine. So if you're going to make some bulk wine, not for everybody, make good bulk wine. Get a winemaker, get a consultant, and do a good job with it. Support your local grape commission. Okay, it's a marketing thing. Get involved. Okay, you don't have to get on the board, but get on a committee and help out. And because that's what we could use. And most of all, we need some more wineries up there. You don't need to make 20,000 cases or 10 or 5 or 3. How about 100? How about 200? And Andy Becksoffer or any of his team, if you're listening, make 100 cases of freaking nice Cabernet for us, please. Get it in the barrel. Get it a score, because scores are important. They sell and they go into, you know, the magazines, and people read the magazines. And secondly, and I'm almost done, we need to understand what we're talking about in marketing and messaging. You know, that somebody mentioned smoke taint earlier. I think it was Jeff. We need to go quiet here, folks. And it's super important. If we're going to market and talk, let's talk about good stuff. Okay. Let's talk about sustainable farming, organic farming. Let's talk about a new vineyard going in. Quit talking about smoke, because it goes right to the aisle where two people from Breakthrough Beverage in Naples, Florida, meet me and say, you guys got to stop talking about smoke, because it's ruining our California business, because the people on the East Coast think California is on fire. And so you know what they do? They buy imports. And you know, Rob McMullen writes a little thing about how wine sales are down before the virus and all that. One thing he doesn't consider, and one thing that we all need to consider, there's a little bit of the down business because of some of this bad noise. So we all need to love each other a little bit and talk about good stuff. And but here it is, the final. There's some good news out there. The retail business is up. I still see premiumization is still going well. The bulk wine prices are down, so somebody's going to pay for that. But guess what? When the bulk prices are down, it gets purchased. It goes into a program. The brokers make a commission. It creates some demand, and it gets rid of that bulk. And ultimately, guess what? Supply demand goes up. So let's take our losses, get rid of this stuff. And the other thing I see in this virus thing, Americans seem to be buying more local. We definitely see a demand, and you know, the old American flag is flying in our across the nation. People are drinking more, at least I am. And other than that, I think there's some good things out there. We just need to stick to it and hunker down and be careful what we say and market positive and stay positive. And that's about what I have to say.
Clay, thank you very much. Looking at questions, we have two questions, and I think these can be addressed pretty simply. First, for Clay, you got into the wine business in 2003, but how long have you been growing grapes?
Since 1980.
Great.
I'm old.
Okay. And one other question, and any of the speakers who want to address this, please, do you see, some of you touched on this, but do you see value to being certified organic or biodynamic or sustainable in today's market?
My
Anybody?
2 cents is this. If you're not certified sustainable, you're not paying attention to business, because it is super important and getting more important. We're turning about 900 acres into organic certification, and we will be certified next year. Hillside Mountain Fruit. It is something to talk about. It's positive. People are looking for healthy stuff. Are we going to make a certified organic wine? No. But are we going to farm the grapes organically? Absolutely. It will increase the attention and talking points. It's a positive thing. This day and age, it's not as hard to go organic as it used to be. That's my 2 cents.
Jeff or Glenn, any comments?
Yeah, I've got a quick comment on sustainability. I definitely think that, you know, it's been challenging for growers over the years to invest in efforts like sustainability or organic, unless they know they're going to get some extra return on that. What we're seeing in the marketplace a lot of times with sustainability is just the fact that if someone is certified, or if they've at least self-assessed through the program or programs that exist, that looks very good to buyers. If you share that information with them, you talk to them about that certification or that effort that you've made, that gives the buyer a pretty good idea that you have, you know, interest in doing something other than maximizing tons and maximizing price. And it paints a picture of a grower that's a little bit more concerned with the bigger picture, you know, even if it doesn't translate into an additional dollar in his wallet per se.
Yeah, I mean, we've seen in the marketplace, definitely, we've seen interest for sustainable wines on the bulk market, you know, where we've gone back and and looked at that. Organic definitely has a play in terms of buyers looking for organic fruit. But I agree with Jeff. I mean, I think it's a point of difference. And you're out there and buyers are looking for a point of difference. Tell your story. Talk about what you do. I think commitment and passion play. This is a relationship game still. You know, we're not making widgets. And so I do think it shows a commitment to it. And I think you've got wineries out there looking for a point of difference in marketing their product. So we've got, hey, Glenn, we can put this on it and it maybe separates us from the pack. So I think, you know, you got to be careful how much you're going to, it's going to cost you to do that, right? You're still running a business, but I think you should be looking at those things because the story is positive.
Great. I actually would love to chime in here. We got a comment. Christian Miller is on the call. Christian, thank you for chiming in here with Full Glass Research. He says, quick comment on certified organic sustainable. Wine Market Council research in 2018 using a large sample of frequent consumers in a well-controlled test found $1 to $4 premium for organic or sustainable once bottle price was above $12 per bottle. Also, he said he agrees with Clay's comment on it's something to talk about. CSWA trade research recently showed that. So Christian, thanks for passing that information along as well. So with that, I think we've come to the end here. We appreciate everybody's time. I would like to take a quick second here to thank our individual speakers. Thank you, Jeff, Glenn, Clay. We really appreciate your insight. Would also like to thank a moment for a shout out to all of our affiliate sponsors. We've got a great team of sponsors who really help to make this these types of events possible. So thanks everyone. And with that, we'd like to conclude and tell everybody, thank you. Have a great day. Take care.